Hello and welcome to episode 2 of Learning How to Trade. Today we're going to talk about trading psychology. I want to focus on two books today. I want to focus on Market Wizards and Trading in the Zone. Most traders focus on strategy, but the real key to success lies in your mindset. There are basically two things that I like for market psychology. Patience, pay yourself, and it is a marathon and it's not a sprint. It takes time to achieve your goals, and that needs to be something you need to be okay with, because there are people that will 100x, and this is where all of the fear comes into it, and the greed aspect comes into it. So mindset and discipline, having the correct mindset and not allowing your emotions to govern your use of the charts. I'll give a quick example here. So a friend of mine who is, because I don't really experience fear very much, but a friend of mine who likes to trade and invest all of his money into his trades has lost about £15,000, which is nothing compared to what I've lost, but for him it's quite a significant number. Okay. And yes, it is a significant number. £100,000 was significant to me as well. But the emotional aspect is incredibly important to manage, because he will experience fear. And I've sensed it before. When he is entering a trade, he has, I can sense it. His breathing goes really weird. You can feel the anxiety in the air when he's like even entering something, because he is only entering something which is right at the top of where it is. And he's investing, £5,000 per trade. And when it goes down a tiny one or two ticks, he will like, oh no, I'm going to lose everything. So he just exits. Buy high, sell low, classic. And then he'll watch it moon after. He'll go to the absolute moon. But part of that is also discipline too. So being disciplined within your trading strategy and knowing when you can control your emotions and be consistent, having a disciplined approach rather than trying to seek perfection. I'm a terrible one for this. I like to be right all the time, and no one can be right all the time. However, I do like to be right all the time, but I will admit when I'm wrong, and I will admit when I've made a mistake. Like for example here, I'll say, Bitcoin is looking extremely bullish. It is looking very, very bullish here. We've got a lot of market structure which would say so. And for me, it's at a point where you're like, right, okay, this can only go up here for the time being. We'll find 100k as support, and then maybe we can see new all-time highs to come. Okay, so these two books are incredible books. The best for market psychology, in my opinion. Unknown Market Wizards, or Market Wizards, talks to many different traders within the market space who have given their own opinions and examples of how they managed to get to where they are. I think it's great. It's great. So yeah, why does trading psychology matter? And let's go to group 1, risk management. Having that risk management and setting your stop loss, because this really does play into mindset and discipline, and having a risk management. When your trade is invalidated, you have your stop loss and you get out of it. You don't stay in it, you get out of it. I've made this mistake before in the past, and it's cost me hundreds of thousands of pounds, and it can for you too. If it will, it's only a matter of, it's not a matter of will, it's a matter of when. No, it's not a matter of when, it's a matter of will. You will if you don't have a stop loss. It's just how it is, really. Correctly managed stop loss, where you're moving it constantly. 3, you learn and adapt to the market conditions all the time. In every area of trading, essentially, you will need to learn and adapt to all market environments, such as GameStop, such as Bitcoin. Bitcoin doesn't predominantly work on the RSI or anything like that. It works specifically on volume based indicators. Yes, you can trade it the way that you want to trade it, but if you want to swing trade it, then the way to do it would be through, if you want to get really accurate entries, through the volume based levels and being patient and waiting for your levels to hit. You have to adapt to those areas within the chart that, and be open to changing your strategies based on the market conditions rather than rigidly sticking to just one approach all the time. I know I rigidly stick to this one. It's because it works, and it's been proven to work through my statistics and my journaling that I've taken over the years. Then we lead to confidence and overconfidence. Okay, let's just cover that one. Confidence versus overconfidence. Where should we start with this one? So you need to kind of build your confidence over time. So you need to find certain techniques such as paper trading. And paper trading is a bit of a weird one, okay, because it's similar to trading in the technical aspect, but it doesn't carry the same psychological weight as working with your actual money, because working with your actual money becomes a difficult one because you're actually working with your money. There was a time when I wasn't making my target of $500 a day, and it really bothered me big time that I didn't hit the $500. I'd rather hit the percentage gain. So because I didn't hit the $500, it actually hit me more than having a red day in general. So then I changed to percentages, and it made all the difference. Okay, what can we cover? So yeah, we can also talk about avoiding overconfidence too. So you can have pitfalls of being overconfident, which may lead to like reckless trading decisions. So let's just say you long at the top here, and it goes down, because you're overconfident. You're thinking, holy shit, this is about to break out, but it was actually a double top or a swing failure pattern of the highs there. All right. Okay, next one. Mental toughness, resilience. Bite down on your gum shield. Yeah. We all need to develop the ability to bounce back from losses and having emotional distress within our lives in general, but also on the chart, because this can be emotionally distressing. Losing a serious amount of money can be extremely distressing or stressful for you. It has been for me. However, you can utilize that distress and stress to take you to the next level and dedicate your time and effort into the charts and to become a better trader. It will take you time, and it will take you discipline. You can be one of those people that says, I've got to wait until tomorrow, or I've got to wait until the new year, because I can't now because I have things to do. If you want to do this, you need to dedicate a lot of time to it. I'm talking thousands of hours. It takes 10,000 hours to become. They say it takes 10,000 hours to become, good, perfect of whatever you're doing, or professional in whatever you're doing. But you need to be tough within this space. You really do, and you've got to have the patience within the mental toughness to wait for the right trading opportunities rather than forcing trades. Be patient, wait for your level to hit, see the reaction, take the trade. It's as simple as that, Don't just enter willy-nilly. You can... Yeah. I mean, you can enter based on your emotions, you really can. And I would say the majority of the time, you will get wrecked if you do that. it links back to the first video I made about Elliott Wave, about the psychology of the market patterns, and you entering like that at a wave 3, at the top of the wave 3 or the top of the wave 5, is akin to what we're talking about with towards patience and waiting for the right trade to come to you, rather than not waiting for the trade and you get wrecked. For example, we're all going to get wrecked here in space, like I can guarantee you, unless you don't use a stop loss. So I'm going to put emphasis on risk management and being patient. Patience, 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 patience. All of them require patience. Pay yourself. Realize your realized gains. Your realized gains aren't real until you realize them. I sound like a crazy person right now, but I'm just literally trying to help, you know. We've all been in this position. I know I can help you because what I do is very successful, and it has got me very, very far, and it's made me a lot of money, and it can make you a lot of money too. Okay. So mindfulness and presence. There was a time when I used to meditate every day, and I can say that it did make a big difference in staying present. You can use like breathing techniques to avoid, you know, distractions. So being present really does enable you to keep focus on, you know, the current market. When you're alert, let's just say you're setting an alert here for a short, let's just say on Doge. I've set my alert. My alert will hit. I'm being patient. I'm analyzing the reaction, and I'm taking the trade. Cool. And still, like, I'm not saying that I'm perfect. I always make mistakes sometimes, but I get out of the trade when I know I'm wrong these days. Final one. Let's just pause it there, shall we? Sorry about that. I accidentally closed the tab. So bear with me. All right. So we've gone to the last point, which is community and support. So having a really good community will enable you to learn from others. There is a huge value of being part of a trading community, or having a mentor to learn different perspectives and experiences. And it really is like a support group too, you know. We can talk about support groups too. You know, you can have your family believe in you, and you know, that really does make a difference. If you say you want to take your you know, your trading to the next level, and they're like, yeah, come on, do it. It only takes one person to believe in you, and you can really, like, I know this firsthand, it's fantastic. It takes one person to believe in you, and then you can take it to the next level because they just believe in you. And I love it because I know how much of a difference it makes in your trading ability and your want and need to change your life and other people's lives too. So I really hope that encapsulates everything about trading psychology. I haven't given specific examples today. I wanted to help on, you know, helping you to succeed in the psychological game, recommending these 2 books, which I really hope you'll both, or everyone who watches this video reads. And yeah, man, really not much else. So if there are specific aspects of the video you're curious about, or if you want more detailed insights into the areas, then feel free to ask me about them. Because there are specific strategies to this, and as Mark Douglas said, markets are unpredictable, but your mindset doesn't have to be. I think I'll end it there. All right. I hope you enjoyed today, and I'll catch you in the next one. Thanks. Bye bye.